It's a big day for retail earnings in the U.S. Target and Lowe's kicked off the parade this morning, Staples as well. Mixed results generally, but on Target, we're going to get shareholder action. Diana Avigdor, Vice President and Head of Trading at Barometer Capital. She's at the TSX. Let's talk about those Target numbers. In your view, did they beat? Did they want you to stay with the stock?
Target beat on EPS, Target beat on revenue, and their margins were better than expected. The interesting thing about Target is that it's deemed a turnaround story. So even the expectations, even if they would have missed, I think that the street is giving them a little bit of rope. There is something like $2 billion worth of cost savings that they're trying to achieve, and the only differentiation on the street is whether they'll be able to do it in the time that they allotted themselves or not. So the expectations of 2.3% comps was met. 2.3% is not that much in retail world, but Home Depot yesterday was 7.1, and Lowe's today was I think over 5%, 5.1 if I remember correctly, and the stock is getting punished. Lowe's pre-open on a 5.1% comp, and Target is flat, I think even slightly up when I left the office on a 2.3% comp. So it's a turnaround story, and what they've done to close down Canada and to just slash whatever was not working and revamp their whole merchandising and so forth. So the street is giving them some rope, and even then they beat the expectations. So I think we stay with it for now.
I'm showing actually the stock has gained a bit of traction. It's up a little over 2%.
Oh, nice.
You mentioned that the street's giving it a benefit of the doubt. It's a turnaround story, but I often think turnaround stories should be dirt cheap. And I never got a sense that Target was dirt cheap. I mean, some of it was, really weak numbers, but even now it's trading at 17 times earnings. Maybe that's cheap in this market.
Francis, the U.S. consumer is in high focus right now. Retail index, sub-index, is up 11.5% year to date. The market is pricing in consumer turnaround story, and all the retailers have benefited from it. Apparel a little less so, as you saw with Urban yesterday, but American Eagle is up 5%. So the market is pricing in a consumer turnaround, which has yet to actually pan out. And people are starting to be worried whether the consumer is going to pay down debt a lot more and save a lot more given the financial crisis and the trauma that it has created. So I think that that's what you're seeing reflected in valuations. Historically, it has not worked out for people to bet against the U.S. consumer. It's an extremely resilient group. It may take longer. There is a lot of debt to pay down, and there certainly is a frugality mentality that has changed over the last decade. So I think that Targets and the Walmarts do benefit from that mentality, and the Home Depot as it relates to people wanting to invest in their in their homes. And that's what I think you're seeing on valuation. If earnings catch up and pan out as it has been priced, I think that it is okay. At Barometer, of course, we watch the price action, and we won't hesitate to take our stop losses if the stocks don't act well. But for now, they're holding up.
Lowe's, as you mentioned, I mean, it did miss. The same-store sales were, you were a fraction off. It was 5.2%, but pretty good. The bottom line missed a little bit. But I guess the interesting thing is, and the stock's indicated down, we're looking at right now a little over 5%. In the past 6 months, Lowe's has beaten Home Depot, so maybe they tend to track one or the other. Do you like either name?
We like both. We've spoken in this forum about Home Depot a lot, Lowe's a little less. It's the same theme. Earnings were up, EPS was up 16.5%, but missed by 4 cents at 70. Margins are at 35.5%, and comps are at 5.1 or 5.2%, but missed the 6% expected. So they missed on the expectations. Sometimes the expectations are a little too high. Nevertheless, the stock is trading down substantially, And according to Barometer discipline, we'll be watching it carefully for price action. You know, the markets are so, you know, correlations are down, and we speak about correlations as being at almost decade lows, but all crowded trades are very, very crowded. And some of these trades really have, you know, a huge following, particularly because correlations are so low, and investors had to be in sectors that have really worked to make money because the dispersion is so high. So all this money that has gone into this retail trade, you know, the financials are really starting to get a footing. So maybe we see some money rotation, and we'll see how much it damages. But for a stock like Lowe's that reported a pretty decent number, but yes, a little light of expectations, for it to be trading down 6%, it's quite an air pocket. So we'll see if it's just money flows or anything more than that.
Diane, I do have to go, but I was just looking at the financials in the U.S., talking about gaining traction in the past month. They're the best performing. On a year-to-date basis, they're, you know, I don't know, maybe closer to the bottom of the pile. So financials are moving up the list. We'll talk about that another time, though. Thanks very much for taking the time today.
Thank you, Francis.
Diane Avigdor of Barometer Capital Management.